Welcome to the Friday Five with Steve Greenfield on CBT News.
Welcome to this week's Friday Five, where we recap the last week's automotive technology deals. This is Steve Greenfield from Automotive Ventures, and thanks for joining us. Let's start off with a reality check on just how good the market's been for dealers over the past 6 months. Despite a pandemic that shut down some store showrooms for most of last spring, U.S. dealerships on average posted their highest profits ever in 2020. According to NADA, the average U.S. dealership recorded a net pre-tax profit of $2.1 million last year, a 48% increase from the prior year. The post-tax earnings of the average dealer increased more than 9 times to $590,000. Amidst a global pandemic, it was a great time to be in automotive retail. Big news in the automotive advertising space this week as Force Marketing acquired GS Marketing, a 3-decade-old industry leader in the same category. The deal brings the total number of dealerships served to more than 1,500 nationwide. The acquisition of GSM's business adds fixed ops marketing capabilities for parts and service departments to Force Marketing's legacy portfolio of variable ops solutions for dealership vehicle sales. Congratulations to both the Force and GSM teams. ChargeLab, which has raised $4.3 million in seed financing, led by Construct Capital and Root Ventures, is looking to be the software provider for EV chargers built by everyone else. ChargeLab already has an agreement with ABB to be their default software provider as they go to market. The big industrial manufacturer is getting ready to launch their next charging product in North America. As companies like Reef, Metropolis, and Park My Fleet revamp garages and parking lots to service the next generation of vehicles, ChargeLab thinks that their software can power their EV charging services as they begin to roll out that functionality across the lots they own. ChargeLab eventually wants to integrate with the back end of companies like ChargePoint and Electrify America to make the charging process as efficient for everyone. CDK Global has completed the sale of its international business to private equity firm Francisco Partners. The deal, valued at $1.45 billion, closed Monday but was announced last November. The company has been renamed Keyloop. This puts over $1 billion on CDK Global's balance sheet, so expect them to make some big acquisitions this year, possibly coming soon. Fluid Truck announced a $63 million Series A funding led by Bison Capital with participation by Sumitomo Corporation of the Americas, Fluid Vehicle Owners, and Inca Investments, which is part of the Inca Group, which operates 378 IKEA furniture stores in 31 countries. Fluid Truck provides businesses the ability to rent from its fleet of trucks, vans, and SUVs. Late last year, the company added 600 Lightning e-Motors electric vehicles to its fleet, consisting of electrified Ford E450 Class 4 trucks and Lightning electric Hino 268 Class 6 trucks. The long-awaited ACV Auctions S1 filing for their IPO is finally available online, which means we will see them trade as a public company within weeks. Since first going live back in 2015, ACV has expanded from their first territory in Buffalo, New York, to 125 territories as of the end of last year. The gross value of vehicles sold has increased from $23 million to $3.3 billion over that time period, and their dealer count has increased from 5,000 to over 16,000. For 2020, ACV sold 391,000 units, an increase of 62% from the same period the previous year, despite COVID. For 2020, ACV generated total revenue of $208 million, an increase of 95% from the prior year. It'll be great to see ACV go public, and their valuation could approach $3 billion. Autonomous trucking company Too Simple, which gained momentum with hundreds of millions of dollars in financing from Chinese investors and U.S. freight hauling companies, has filed paperwork to go public and plans to join the U.S. stock market as early as next month. Too Simple raised $215 million in a 2019 financing round that valued it at $1.2 billion. It has since raised more capital but declined to share its latest valuation. Rollick, which operates the Go Rollick Power Sports, RV, and boat buying program marketplace, has closed $8.5 million in funding. The new investment comes from strategic investors Sandbach InsurTech Ventures and Tech Nexus Venture Collaborative, as well as Dallas Venture Capital, Congress Avenue Ventures, and London Technology Club. Live Oak Venture Partners, Silverton Partners, Autotech Ventures, Manchester Story, and some venture partners in Capital Factory continued their support in this round of funding. The current round brings the total capital invested in Rollick to $22 million. Congratulations to Bernie Brenner and the Rollick team down in Austin. On to our companies to watch. Every week we highlight interesting companies in the automotive technology space to keep an eye on. If you read my monthly industry intel report, I showcase a few companies each month, and we take the opportunity here on the Friday 5 to share some of those companies each week with you. Today we'll look at two companies to watch, Fixed Ops Digital and AutoApp. Our first company to watch, Fixed Ops Digital, founded in 2016, is located in Denver, Colorado. Fixed Ops Digital is a digital marketing agency primarily working in automotive fixed ops marketing. Their goal is to help bring advanced digital marketing tactics to automotive service, parts, accessories, and collision repair marketing. Most OEM service marketing programs are vanilla and inefficient, often recycling the same customers in your service drive. This is why the OEMs are so focused on creating more conquest repair orders. Fixed Ops Digital's Dealer Wallet product gives your customers a digital-first experience. Dealer Wallet is the automotive industry's mobile wallet marketing solution. It allows a franchise car dealership to convert service special coupons on their website into downloadable Apple Pay and Google Pay mobile wallet offers. If you're looking to drive more fixed operations business, check out Fixed Ops Digital. Our second company to watch this week is AutoApp, founded in 2012 and located in Portland, Oregon. Auto retailers today face heightened safety recall liability, compliance requirements, and management overhead costs as a result of the error-prone safety recall information they are forced to use from NHTSA and off-brand OEMs. To address this, AutoApp, the industry's #1 source for accurate and timely safety recall discovery, reporting, on-demand status lookup, and recall management software, has developed advanced data collection, cleansing, and status verification processes to correct errors out of sync safety recall information. With safety recall management solutions that address before, during, and after sale, with informed acquisition, daily inventory monitoring, consumer disclosure reports, recall alerting, and post-sale consumer vehicle recall discovery, franchise dealers can make better business decisions, reduce their liability, streamline compliance, and generate net new warranty reimbursement revenue. Check out AutoApp for more information. So that's your weekly Friday 5, a quick wrap up of the big deals in automotive technology over the past week. It's an exciting time to be in the automotive space with a ton of deals going on. Make sure you stay tuned in each week to stay up to date on the auto industry's technology M&A activity, and I'll keep my fingers on the pulse of deals being done so I can share updates each week with you. If you're an early stage automotive technology entrepreneur looking to raise money, or an entrepreneur who wants to chat about the best timing and process to sell your company to achieve the best outcome, I'd love to discuss with you. Thank you for tuning in to CBT News for this week's Friday 5, and we'll see you next week.
Thanks for joining us for another edition of the Friday 5 with your host, Steve Greenfield.